Amazon. We all use it, right? But when it comes to its stock, things can get a little murky. So today, we're going to do a full technical deep dive. We're going to peel back the layers, look at the charts, and see what the data is really telling us about where Amazon might be heading next. Let's jump right in.
So that's the big question on everyone's mind, isn't it? What's the real story behind the numbers? Is this stock getting ready for a massive breakout, or are there some red flags we should be worried about? You know, it's kind of like a detective story. We're going to put on our hats, look at all the clues, and see if we can figure this thing out.
So here's our game plan. First up, we'll see what the stock's been up to lately, kind of like a quick recap. Then we'll get into the fun stuff, decoding the trend lines and digging into the analyst's toolbox. After that, we'll pinpoint the make-or-break price levels and map out 3 possible scenarios. And finally, we'll tie it all together with the big takeaway.
All right, first things first. Before we can even think about looking forward, we've got to look back, right? So let's check out what's been happening with Amazon stock over the last few months. And trust me, it's been a bit of a roller coaster.
Yeah, you can see it right there. It has been a pretty wild ride. We saw a nice little rally into September where it hit a peak, but, well, since then, it's kind of lost its mojo and has been slowly drifting down.
So what does all this up and down really mean? Well, to put it simply, the stock is basically treading water. It's stuck in this holding pattern. Lots of movement, sure, but no real direction. It just can't seem to make up its mind which way it wants to go.
Okay, now that we've got the lay of the land, let's start our real detective work. Our first big clue comes from decoding the trend lines. We're talking about moving averages, which are awesome for cutting through all that day-to-day noise and seeing what's really going on.
So, what exactly is a moving average? Well, just think of it like this. It's the smoothed-out path of the stock's price. It gets rid of all the random, choppy movements and helps us see the bigger picture. You know, are we generally climbing a hill, going down one, or just walking on flat ground?
And this is where it starts to get really interesting. What we've got here is a classic tug of war. The short-term trends, they're basically pushing down on the price, acting like a heavy ceiling. But the long-term trend, that's trying to hold it up, like a floor. It's a battle, and the big question is, who's going to win?
So here's the bottom line on this, at least for now. The bears, the sellers, they seem to have the upper hand. Because the price is stuck below most of those key short-term lines, all the immediate pressure is pointing down. That's a huge clue.
All right, let's pop the hood and look at the engine. It's time to break out the analyst's diagnostic tools. These are the indicators that are going to give us a much deeper look at the stock's internal health and, maybe more importantly, its momentum.
Okay, first tool out of the box is something called the MACD. Now, I know it sounds super technical, but don't worry about the name. All you really need to know is that it's a momentum gauge. It's like a speedometer that tells us who's in control, the buyers or the sellers.
And what's the MACD telling us? Well, it couldn't be clearer. See how both those values are negative? That is a classic textbook bearish signal. It's basically screaming that right now the sellers are the ones with their foot on the gas.
Okay, next indicator, the RSI, the Relative Strength Index. I love this one. The easiest way to think about it is as a Goldilocks indicator. It tells us if the stock's price is getting too hot, that's overbought, too cold, that's oversold, or if it's just right.
And as you can see, Amazon's RSI is right in that neutral, just right zone. So what does that mean for us? It means the stock isn't stretched too far in either direction. It's got plenty of room to run up or down from here.
Now, when we look at the rest of our diagnostic tools, they're all kind of singing the same tune. You've got the Williams R%, the Money Flow Index. They're also pointing to bearish signals. Even the Arun indicator is hinting at a potential downtrend. So when you add it all up, the evidence from our toolkit is definitely telling us to be cautious. Okay, so the clues we've gathered so far are definitely leaning bearish. Now for the next crucial step. Let's identify the battle lines. We need to find the exact price levels, the floors and ceilings that are going to tell us where this stock might go next.
In the world of trading, we call these levels support and resistance. But honestly, it's way easier to just think of them as a floor and a ceiling. Support is the floor. It's a price where buyers tend to jump in and stop the stock from falling. And resistance, that's the ceiling, where sellers usually show up and say, nope, not going any higher.
So what's the floor we need to be watching? It's right around 223.56. This is the first big line in the sand for the buyers, for the bulls. If the price breaks down through this level, well, that could be a really bad sign that more selling is on the way.
And on the flip side, what about the ceiling? That's sitting up at 233.70. For the buyers to have any hope of taking back control, they absolutely have to smash through that level. It's the first major roadblock they need to clear if we're going to see any kind of rally.
All right, let's take a breath. We've looked at the recent price action, we've checked our diagnostic tools, and now we have our key price levels. We've gathered all the evidence, so now we can finally map out the 3 most likely scenarios for what could happen next.
Okay, so here they are, the 3 possible futures for Amazon. Scenario 1, the bullish case. The stock gets a sudden burst of energy and punches right through that 233.70 ceiling. Scenario 2, the bearish case. The downward drift continues, it breaks through that floor we talked about, and heads for the next level of support way down near 213.41. And then there's Scenario 3, the neutral case. The tug of war just keeps going and the stock stays trapped, bouncing back and forth between that floor and ceiling.
All right, this is it. It's time to bring it all home. We've looked at all the evidence. We've considered all the possibilities. So what's the final verdict? What is all of this technical data actually telling us about Amazon?
Here's the takeaway from all of this. Right now, Amazon stock is at a really critical crossroads. The short-term trend is pointing down, and most of our technical tools are flashing caution signs. So the most important thing, the real key here, is to watch those floor and ceiling levels we identified. A break of either one is going to be our biggest clue as to what happens next. And that really brings us to one final crucial piece of advice that comes out of all of this analysis, and it's this. Risk management is absolutely essential right now. With so many signs pointing to uncertainty, it's just a powerful reminder that understanding your risk is every bit as important, maybe even more important, than chasing potential rewards.